The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Well, closing out the market trade on Friday, we got a little bit of a bounce in soybeans. Been a tough week there, though. Corn was relatively firm. Wheat as well, mostly mixed to lower in Chicago wheat futures. Cattle and hogs, though, had a good end of the week, and we continue to have a very strong dollar. A lot of news headlines driving the markets this week. Let's talk about it. Joining us now for analysis, Naomi Bloom with Total Farm Marketing. And Naomi, welcome back to Market Talk. It's good to have you on the show again.
Yeah, thanks for having me.
Well, I equated this week's grain trade to mostly news headline driven, I would say. That and a high dollar, kind of the main themes I noticed across all grains and oilseeds, corn, beans, wheat in particular. Would that be how you would sum up and characterize this week's grain trade, Naomi?
Yeah, I think you hit the nail on the head. We've just been in this holding pattern. Corn has been in about a 10 to 15 cent trading range for quite a few weeks now. We're well supported, of course, by fundamental demand with ethanol and exports, but we just don't quite have a reason to rally yet, but we also don't have any fundamental reason to see prices go lower at the moment. Soybeans worked lower this week to the low end of chart support on daily charts, even poking lower below support on Thursday and Friday, but we didn't see any sell stops really get triggered. So what was encouraging about Friday's trade is that we were able to finish the day with gains, putting in a little baby hook reversal on those daily charts to let the soybean market say, I'm not quite done yet. There might be more to the story as we keep an eye on weather in South America. And of course, our export demand here actually, been okay ahead of the new administration. And wheat prices still just kind of stable as we keep an eye on the ongoing issues in the Black Sea region.
Well, I think about soybeans. Palm oil, I think, was down 9, almost 10% on the week. And so maybe some weakness there with world veg oil factors just as a whole. And you mentioned South American weather. A lot of talk about that. Of course, it's that time period. We had China and Brazil, though, announcing more agreements this week, strengthening their ties. I didn't see much in the way of soy, but I think all of this together just kind of, it's an interesting thing to watch in soy in particular right now, Naomi.
Yeah, so many moving parts happening there. Like you said, palm oil prices working lower, bean oil prices had been working lower. So that just weighed on soybean prices in general. And the market, again, we have lost maybe 30, 40 cents from the highs that we had a couple weeks ago. But we're sitting on some pretty important support lines, technically speaking, and we need to keep an eye on South American weather. We have zero weather premium in the market right now. So if weather in Brazil starts to get hotter and drier and is not maybe conducive to that record crop we're all expecting, that would be a reason why soybean prices could work higher. And what's interesting, I went back at the past decade because a client had asked me, hey, is there any truth to the saying that the bears get Thanksgiving and the bulls get Christmas? And I said, well, I don't know. Let me take a look at it. So it does seem to be the case that grain prices work a little bit lower going into Thanksgiving. But I thought what was interesting is that after Thanksgiving and into the middle of December or late December, over the past decade, there's been a rally. And so the average rally has been 90 cents for soybeans. And of course, years where there's bigger carryout, the rally is definitely less, more like 50 or 60 cents. And last year, it's important to point out that the rally was only like 2 days, and then it fizzled out for the rest of December. So I guess, though, my point would be if we can see some sort of a market push higher here into December on whatever news, that's going to be really a great opportunity for producers to focus on your cash sales, especially what's in the bin, and also be thinking about next year's crop as well. Just there's so much uncertainties with the new administration coming in. And then also the reality is that we have sufficient supplies of grain in the world for right now. So that might weigh on prices in 2025.
I'm glad you mentioned that. I know I've noticed, basis spreads, things have been pretty good here as of late. And as folks are wrapping up harvest, they're looking at the books, they're penciling things out. Just that overall general risk management, I think, is very pertinent right now. Especially, say you look at a December corn board price at 425. I mean, if that pencils out for you, why not protect some of that downside risk in some way? There's a lot of tools out there in the toolbox, so to speak, right, Naomi?
Oh, absolutely. And so, thinking not just of cash sales, forward contracting basis contract, you could be looking at some different put option strategies to protect against that downside. Should it occur, again, as we head towards 2025 with just the uncertainty that lies ahead and the perception that supplies are good enough, it's really important for producers to be mindful of, not getting into that holiday lull where you can think, I'll worry about marketing when the new year comes. I don't want to deal with my taxes right now anyway. I've got things pretty much squared away. But that's not okay. You have to really be aware of the opportunities that might present themselves. And on the corn side, the average rally from Thanksgiving-ish into the end of the year is about 33 cents. And we currently have a pennant flag formation on the March corn chart that suggests a 30-cent price breakout move is likely coming. Now, 30 cents higher or lower, we don't know. That depends on the fundamentals that are coming up. But if there's some opportunity there, again, just make sure you're focused on those cash sales. It's so important.
I wonder this too, and we mentioned the dollar earlier. I mean, the dollar getting up near 108 on Friday. For the most part, export wise, we've been able to combat against that, at least on the grain side, I'd say. But if this dollar continues to move higher, what could that potentially mean for grains and or livestock trade and more?
Well, the answer would be potentially less export sales. And so I think that's why we saw just this heavy export capability and sales on the books at harvest time for corn and soybeans. One, we had cheap prices of commodities, so that was able to help offset the higher value. But also, we have this new administration coming in. So, of course, there's concern if there's tariff and trade war type of a thing. But if the dollar does keep rallying, that makes it trickier for other countries to import product based on currency exchange rates. So we want the dollar to work lower to help with our export sales and how that could affect not only grains, but to your point, the livestock complex as well.
Now, switching over to livestock, we're talking just ahead of the cattle on feed report, but cattle futures had a solid end of the week. Feeders have been the leader here. Bit surprising. What's your take in the cattle trade right now?
Yeah, so the feeder market just on fire. We have heard just continued solid cash news support, grid prices there with the pasture conditions improving for most portions of the Midwest and the plains. Those feeders wanted to get them bought so that they could get them on pasture. And then also we're seeing the live cattle market respond as well. So with the feeders, the cash market moving higher, feeder cattle also had a pennant flag formation on the charts, and the breakout to the T with today's market price high of where that breakout should have gone to. So we reached our technical objective now ahead of the cattle on feed report. We've rewarded the reality of stronger cash sales for feeder market. Flipping over to the live cattle seam, that market hasn't taken out any of the summer highs by any means, but we've been inching higher. There was some technical buying there following the feeder cattle market. Now we're going to see with this afternoon's cattle on feed report if we are having any over-the-top bullish news to justify prices to go even higher from where we are, because we're getting overbought technically. We've reached some technical upside targets. The story is pretty familiar where we know we've had tighter supplies of cattle here in this country, but we are importing a serious amount of beef from Australia, from Brazil, from Paraguay. So that's helping to offset those lower supplies. And once we get the Christmas holiday demand wrapped up, I'm a little concerned that the American consumer is going to back off some of that beef demand and go back to just simpler cuts of the ground beef type of a thing for demand. So we'll keep an eye on what the cattle market does. My bias is to be a little bit defensive here, as we still are near historic high values.
Hogs had a great run. Felt like we were seeing a bit of a technical correction, and then felt like we found some technical support to close the week. Any thoughts in the hog trade right now, Naomi?
Well, that's what we're all watching, is that technical marketplace. So that longer term uptrend line is broken, that uptrend line that we had been flirting with for like 3 or 4 months, but that's broken. However, we're not falling because now we're walking sideways and creating a new level of support. We're waiting to see how demand comes into play here for further exports going forward, waiting just to see how cash markets trade. So it's going to be an interesting turning point, I think, for the hog complex in the coming weeks. We're going to be just balancing the cash market fundamentals, the demand fundamentals, along with the technicals. But I'll say if the technical support levels really get taken out, I think you're going to see a pretty significant sell-off for the hog market. One thing I also noticed with hogs is that there's some bear spreading going on with the futures contracts. So that tells me that traders are starting to lean negative in their sentiment, but they like using the spread trading as a way to start to just manage that risk in a way. So keep an eye on the hogs. I think I would lean a little bit defensive there as well.
How about in the dairy sector? Any notes for us there as we close out the week?
So it was a wild week. We had milk prices last week for class 3. We put a bullish reversal on charts. Milk rallied $1 this week. Then we had a milk production report that came out and just made the whole market fall apart. So market prices then lost $1. So the milk production report showed a milk production increase of 0.2%, which doesn't sound like a lot, but it is in the milk world. And then they revised the previous month's figure and increased production from the previous month as well. We have more cattle that are going to be still with milk production, and each of the dairy cattle right now is actually producing more milk as well. So things are starting to turn a little bit negative in the dairy complex just because production numbers are a little bit higher.
Naomi, always enjoy your commentary and having you on the program with us. Anything final you'd mention or reiterate to folks just as they're watching their marketing plan and more here as we near the holiday season?
Yeah, I would just keep an eye on the geopolitics. Actually, I think that's probably one of the bigger things going on out there in the world right now. We have to keep an eye on the Middle East as how that would pertain to crude oil prices. We need to watch, of course, what's happening with Russia, Ukraine, and how that would affect wheat prices. And then, of course, keeping an eye on weather. So just be ready for anything. I think there's some potential opportunities here for a little spurt higher in prices, but you got to be ready to capitalize on those when they come along and just really continue to focus on those cash sales.
Well, I know, too, if folks want to have a conversation with you and the team there at Total Farm Marketing about their marketing plan, a couple different ways to get in touch, phone call, website, etc. How can folks reach out, Naomi?
Yeah, give us a call, 800-334-9779, or look us up online, totalfarmmarketing.com.
Naomi Bloom with Total Farm Marketing, thanks so much for closing out the week of the markets with us here on the show today. Thanks again, and have a happy Thanksgiving.
Thanks, you too.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.